I'm double mic'd and I got a lot going on here. So, um, so loan documentation, mortgage information, that might be in your net worth documents. You can see up here. And then miscellaneous information, name and contact information for like your team, your care team, your deed to your home, a car title. I think it's really helpful to have current medications and your physician's names around. And passwords and access codes are important. And then burial instructions. Some people have burial plots. Some people know what they want to do if they want to be cremated. I think it's important for your family to know that at any age, really. Another tip, consolidate and automate your finances. Simplify your life by really combining like titled accounts. So many people have like 3 checking accounts and 5 savings accounts or 5 IRAs at different places. Just make your life simple and get it down to like one. Combine your life like titled accounts into one account or 2 accounts, something that's more reasonable. Especially like 403Bs, 401Ks, IRAs. A lot of people have them from like old jobs. They don't even know what they're getting, what it's invested in. Try and simplify your life by getting organized there. That's something that doesn't take a lot of time to do. Also, set up auto pay and online payments for monthly bills. How many people use online payments and auto pay? I do. It's the best thing ever. I don't know why people wait for a bill to come in the mail. Like, just get it done. And some of them come right to your checking account, so it's pretty easy to pay. You can talk to your bank about that, about simplifying accounts. Also, adopting like the programs like Quicken. Quicken is a great tool to use to kind of get all your finances in order and put it all in one place. It shows you your budget, it shows what your spending has been, things like that. So Quicken's a good program to use. You can go online or you can buy the program, but yeah, you can go online. You look up Quicken and you can buy it. It's a paid for service, but it's a pretty good tool to use. Yep. I think it's important also to identify and recruit your team, not just your physicians, but like family members, friends. Have a good support team. That seems what's good about this network is that there's a network and a team kind of right here, which is nice. Physicians, specialists, attorneys, accountants. Make sure your insurances are up to date. Your care manager, and a financial advisor. I think it's really important to have someone who can help with your finances. Of course, that's what we do, but it is important. Some people get overwhelmed with being in charge of the finances or understanding what's going on. So, having someone else to kind of help you get through that time is really helpful. Document your intentions. So, executing a power of attorney, which is a document that's used during your lifetime, really important. And I'm going to talk about that in a minute. But that's selecting a specific person that you trust to act on your behalf for all of your financial matters. A healthcare proxy is the same thing. It's something that someone that you trust to make your medical decisions on your behalf. These 2 documents, the power of attorney and the healthcare proxy, are the 2 most important documents during your lifetime. People always think will is the most important. These 2 are more important because if you can't pay your bills, you can't see what your finances are, you need to have someone who you trust to act on your behalf. In addition, with the medical services, with healthcare proxy, you have a health situation, you want to make sure that you have someone that you trust to make your decisions on your behalf. When you go to an attorney to get these 2 documents, these are done with a legal professional. They will have you execute a living will as well, and they will also have you execute a will. Those are important documents as well, but the first 2 you need during your lifetime. These are this one is definitely after death, right? Your will's after you pass, but you want it done. You want it documented where your assets will go, things like that. But these are all done with an attorney, and now they just lump them all together and they'll do all 4 for you when you get your documents done. Another important item to do is confirm your beneficiary designations. People might have 401ks, 403bs from old places that they used to work 10, 20, 30 years ago. And who knows who your beneficiary is? It could have been a different person than you would want to have it now. Always good to confirm your beneficiary designations. I check them all the time just to make sure nothing's changed, nothing's dropped off. So go back and check them, make sure that they're correct, especially if you have any transfer on death accounts or payable on death accounts at banks. Some banks set that up a lot, a TOD account or a POD account. Make sure that you know who the beneficiary is and that that's the person that you want. Some people create a trust, and that depends on your personal situation. If you need a trust document, if a trust is the right tool for you. I'm not going to talk about that here. That's really with an attorney. And again, let your family know of your burial preferences. I think that's really important. People, young, old, you should all know what they would like to have with their burial preferences. Insurance coverage, important to have property and casualty insurance. All of us have it, so that's important. Some people are lucky enough to have long-term care coverage. Does anyone have that? Long-term care, good, because that's really hard to come by now. It's really expensive, but it's great if you have an old policy. That was great. Some people have disability income, disability insurance, life insurance, or business coverage. All right, your financial plan. This is where you get into the nuts and bolts of it. Creating a net worth statement, which we're going to do in a minute. Review your investments. Prepare a budget. We're going to do that as well. Consider some significant expenditures that might be coming up, like making your home more accessible or any costs, the resources that you need to do that. Resources maybe are limited, so maybe you need to have a Medicaid planning attorney. Create a financial plan, which we'll talk about in a minute, and implement any changes suggested by the plan. So your financial plan is a living document that you're going to update, revise, and revisit all the time. You can always move it around. You can always make changes. So we can talk about it. Let's do one more slide. We'll do the budget. I don't know how to make that bigger, but this is all in your left side of your folders. You'll see a sample budget. If anyone hasn't created a budget, this is a sample that you can easily use to kind of start you getting organized. Thank you. So you just kind of go through. I just put in the monthly amount. You got your loans, any insurance premiums that you're going to pay. I think it's helpful to have notes. Thanks, Kevin. And then any variable expenses. Maybe you have home improvements or maintenance that you're going to have on your house. Groceries. I don't know about you, but that's a big piece of my monthly budget, that's for sure. And gas. Clothing, any personal care, and any other kind of dues. Medical might be a large expenditure. And of course, our lovely pets can cost quite a few bits of money. So that's for sure. Do you want to take a break now? Just stand up for a couple minutes? You guys good? What do you want to do? Good. Okay. All right. Thanks, Kevin. No, it won't progress. There you go.
Why not?
Oh, no. That's okay. Okay. All right. Creating a balance sheet. This is how we start with your net worth statement or your balance sheet. If you want to pull it out, it's in there. It's on the left side. It's called a net worth statement. And it looks like this. Can you all see that in your folders? Okay, we'll go back up. So on the left side of your net worth statement are all of your assets. Those are your pluses. And on the right side are all of your minuses or your liabilities. So on the left side, you're going to have any bank accounts, any insurance policies, brokerage or investment accounts, any stock certificates. Some people still have these old DRIP accounts, which is a dividend reinvestment plan. Maybe you bought stock 20 years ago and you wanted the dividends to reinvest. Some people kind of forget about it, but it's probably still out there. Or you might get a statement from someone like a computer share who owns the stock now, and they kind of monitor it for you and send you statements. That's what a DRIP account is. Maybe you have IRAs, 401ks, 403bs. Add that to your left side. That's an asset. Any pension plan. An ESOP is an employee stock option plan. So maybe you had stock options from your previous employer, and any trust accounts. And then on the bottom of your net worth statement, you'll see the use assets. So like your real estate, your house, any cars, boats, any valuables, art, jewelry, you could put all that on the bottom of your net worth statement. And then on the right side is your minuses. So anything that you owe, liabilities. This would be like a mortgage, a home equity line of credit is what a HELOC is, auto loans or a lease, credit cards, any personal loans, any kind of loans that would be deducted from your assets. So if you look at Ivan and Nancy here, you can see, I'm trying to think, let's minus this a little bit better. But you can see, so here, this is something that you can all do. Create a net worth statement. You can add in your checking account, whether it's joint, it was just in Nancy's name or just in Ivan's name, and then your total, your checking, your savings, an emergency fund. Everyone should have an emergency fund, and that's really to cover your expenses for the next 6 to 9 months. I recommend you keep that in savings or a checking, but it's just there in case you need it for an emergency to cover bills for a short period of time. So really helpful to have an emergency fund. So then we just put some a joint account in there, 75,000. So your total non-qualified assets are 160,000. When you get into retirement assets, these are qualified, meaning that some of them haven't been paid. You haven't paid taxes yet because it's an IRA or a 401k or a 403b, so they're tax deferred. So here we have Ivan has a Schwab IRA account of 750,000. Nancy has 125,000. So their total retirement assets are 875,000. So then you take 875,000 plus the 160 of non-qualified assets, and you come up to liquid assets of 1,035,000. And then below that, let's see if I can scroll down. There we go. And then below that, we have your use assets. So it's your real estate, your residence is worth about 300,000. It's in joint title. And then you have some autos and personal property that are all in joint title. So right now your assets are 1.3 million. And then if you look over to the left side of the screen, you're going to see, luckily, Ivan and Nancy don't have any liabilities. So their current net worth is 1.3 million. So that's how you come up with a net worth statement. So hopefully this helps you. You can just fill it out, do a different piece of paper, but at least it gives you some idea of what your net worth is, what does my balance sheet look like, how am I, and then we'll talk about investments in a minute, but kind of gives you an overall picture all on one page, which I think is helpful. Yeah. Is this generated through QuickBooks or one of those forms? No, we have e-money software that we use. Yep. But you can do it on Quicken too. Okay, next we're going to talk about cash flow. So identify and current and projected sources of income, like wages. Maybe some of you have deferred compensation. Social Security is a big piece. Social Security disability might be a big piece. Some of you might be lucky enough to have a pension, which is great. Any annuities, retirement savings, more like required minimum distributions that you might have to take. Workers' compensation might be in there, and disability insurance. Okay. So I think cash flows are really helpful to see. At least for me, I'm more of a picture person, so I like to see numbers and where am I going to be 5 years from now? How much money do I need? How does this work? So a cash flow statement takes everything that we built on the page before on the net worth statement, and then it brings in your expenses from your budget, and we can create a cash flow. So up here, if you remember, Ivan and Nancy had $75,000 taxable, and then about $875,000 retirement, and then another $85,000 in cash accounts. So a total of $1,035,000. They also get Social Security of $31,500. Ivan's lucky enough to get a pension that increases over time, it looks like, or maybe this is just a partial year. So $10,000 pension. Planned distributions from his retirement account. He's going to take out $42,210. That's what they need to live on. And so their total cash inflows are going to be about $83,000. Then you're going to have living expenses, your budget. $58,300 is what they need. And then they're going to pay about $6,100 in taxes. So they anticipate that there might be a slight increase in their additional medical expenses of about $12,500, and they plan on doing a trip this year worth $6,000. And Ivan and Nancy are very charitably inclined, so they're going to give charitable donations out for the next 10 years. So their total cash outflows are $87,000, but their inflows are only $83,000. That leaves them with a slight deficit of $4,000. So what that means is you would have to take that from another pool, right? So you take it a little more from your IRA or more from your cash accounts, but you're going to be a little bit short based on these current expenses. If you go to the next year, which is a full year, you'll see Ivan's Social Security went up a little bit. His pension went up as well, so his increase in inflows is higher. His living expenses, though, are higher as well, and taxes. He has some additional medical expenses. But overall, he's in good shape. He's only at a $2,800 deficit that he needs to take from another source of income. So whether he's pulling from his IRA, his 403B, he's pulling from somewhere to cover that deficit. Or giving up, yeah, giving up something. Yeah. Cutting back on the medical expenses, maybe. Because they're kind of high. Yeah. So, and then what we do is we just kind of bring this out for 10 years, and you'll see down here how that number changes because these numbers increase, right? So inflows increase because of standard of living adjustments, and his planned distributions increase as well because he's in required minimum distribution status. So his distributions go up every year, and that'll cover his shortfall for the most part. If you can get in close to like $1,000, $2,000, that's pretty good for your distributions when you're looking at all of these different variables. Any questions on this? Okay. Is it helpful to see? Oh, good. Yeah, sure.
What happens if you are impacted by changes in the world economy? You have to go back in and redo this.
Yeah, you do. Yeah. What happens if there's changes in the market and market volatility? I don't know about many of you, but this has been a tough week in the market, right? None of us have any control over any of that. But what happens is you might have to redo your plan and your net worth statement and your cash flow. It all depends on kind of year-end values and how much you take out during the year. So another important thing to think about is when the market's positive, like it was in 2024, 2023, we were up double digits, right? Everyone was making money. Those are the times when you can take out money at a little higher rate too. But in times like 2022, when we were down double digits, we were negative double digits in the market. I'm sure some of you saw that on your retirement plans. The number went down in 2022. Those are harder times, and you should probably not take out as much as you would want to out of those accounts because the market's already down, and then you're pulling at the same time. It's kind of like double dipping. Always better to take out a little bit more when it's higher, but we don't always know when that is. I don't know what 2025 is going to bring. That's a big chunk. Yeah. So that would make a huge difference. And hopefully that's not the case. I thought they have talked about not taxing it too. So we'll kind of see. Yeah, we're at the mercy of the government. So I know. Yep. Yeah. Sure. Well, what will happen with Social Security? Basically, is it going to be gone or is it going to be here? And for the most part, we don't know. And that's a large chunk of these people, of Ivan and Nancy's income stream. And I'm sure it is for all of us. We've all paid in and we want to get it back. We don't know what will happen with the upcoming tax laws. I think it's anyone's guess.
While you're talking about Social Security, what happens if only one spouse has Social Security or has disability income and that one passes away? Does the other spouse have any portion of that income?
So for Social Security, you do if you're in Social Security and you're receiving Social Security payments. Then what happens with a spouse is you take the higher dollar amount. So say that you were getting $1,100 on your Social Security income, and Bob was getting $2,300. Then you would take Bob's $2,300 and you would lose yours. But you're still cutting your income, right? Because you're going from 2 checks to 1, even though you're going to the higher one. So create a long-term projection for current and future cash needs. This is really going to impact like your ongoing living expenses and your timing of needs. Maybe you're going to have some home accessibility modifications, some home health care, medical costs that maybe not covered by insurance. So these are kind of cash needs that you might have to come up with. Assisted living and nursing home costs hopefully are further down the road. And then taxes. Do you guys want a break before we get into asset allocation? Yeah, let's take a break.